In an increasingly interconnected world, there are certain flashpoints that hold the global economy hostage, places where geography and politics collide with explosive potential. And none are more critical than this narrow sliver of water. This is the Strait of Hormuz, the world's most important choke point. Every day, a fleet of supertankers navigates this passage, a vital artery connecting the oil-rich Persian Gulf with the open ocean. Through this strait flows a staggering 1/5 of the entire world's petroleum supply, a torrent of liquid energy that powers our cities, fuels our industries, and moves our globalized society. Without it, the world as we know it would grind to a halt. But the story of Hormuz didn't begin with oil. For centuries, this strategic waterway was the heart of a vibrant maritime empire. Long before the age of petroleum, the ancient kingdom of Hormuz flourished here, its ports bustling with merchants from Arabia, India, and Africa. Ships laden with spices, silks, and pearls crowded its harbors, making it a pivotal node on the ancient trade routes that linked east and west. Historical maps from different eras all tell the same story. Whoever controlled this strait controlled access to the immense wealth of the Persian Gulf. This coveted prize was fiercely contested, witnessing the rise and fall of empires, from the Portuguese to the British, each leaving their mark on this timeless battleground for maritime supremacy. Today, the spices and silks have been replaced by a different kind of treasure: hydrocarbons. The Strait of Hormuz has transformed into the world's premier oil superhighway, a constant procession of colossal vessels. Massive oil tankers, some stretching over 300 meters long, inch their way through the designated shipping lanes, carrying the crude exports of giants like Saudi Arabia, Iran, the UAE, Iraq, and Kuwait. These ships are the lifeblood of industrial powerhouses in Asia, Europe, and North America, their roots tracing the lifelines of the modern economy. It's not just oil. The world's largest exporter of liquefied natural gas, Qatar, sends nearly all of its supply through this very passage, highlighting a profound dependency that extends far beyond gasoline. This immense economic significance inevitably makes the Strait of Hormuz a geopolitical hotspot of the highest order. At its narrowest point, the shipping lane is just 2 miles wide, creating a vulnerable bottleneck where tensions can escalate in an instant. The region is a stage for a constant high-stakes drama, monitored 24/7 from advanced naval command centers around the globe. Decades of history are filled with incidents, seized tankers, naval standoffs, and aggressive military exercises that send shockwaves through global markets. Every diplomatic fallout and every regional rivalry reverberates here, turning the water into a chessboard for international power plays. And so, the great tankers continue their journey, a fragile convoy of global prosperity passing under the constant, watchful gaze of warships, a stark reminder that the world's energy supply flows through perpetually troubled waters. Video opens with a dramatic, sweeping aerial shot of a colossal oil supertanker moving slowly through a narrow channel. The water is still, but the tight framing creates an undercurrent of tension. Scene shifts to a rapid montage of global financial centers: the New York Stock Exchange floor, the shimmering skyline of Shanghai, the London Stock Exchange. Text flashes on screen. What single point can bring the world's economy to its knees? The camera pulls back to a satellite view of Earth, then zooms in with breathtaking speed on the Persian Gulf, a red circle dramatically highlighting the Strait of Hormuz. Narrator: imagine a single waterway so vital that its closure could trigger a global recession. A choke point so narrow yet responsible for carrying the lifeblood of our modern world. This is the Strait of Hormuz, the world's most critical and most dangerous economic artery. Its story is one of geography, power, and extreme vulnerability, a constant reminder of how interconnected and fragile our global system truly is. At its narrowest point, the Strait of Hormuz is a mere 21 miles wide, a slender passage connecting the Persian Gulf to the open ocean between the coasts of Iran and Oman. Despite its small size, the volume of traffic passing through is staggering. Every single day, between 20 and 21 million barrels of crude oil and petroleum products navigate these waters. That's nearly 1/5 of the entire world's daily consumption, a river of black gold flowing to markets across the globe. For major oil-producing nations like Saudi Arabia, the UAE, Iraq, and Kuwait, the strait isn't just a route, it's their primary gateway to the global economy. Without it, their most valuable resource would be effectively landlocked. This unique geography transforms the strait from a simple shipping lane into a powerful geopolitical chess piece. Geopolitical analyst appears on screen, standing before a large digital map displaying naval fleet movements. Bonus analyst: the strategic vulnerability here is immense. Iran's long coastline gives it a dominant position along the northern edge of the strait. This allows them to exert significant influence, not just through conventional naval power, but through asymmetric tactics as well. Realistic AIGC-generated footage shows Iranian Revolutionary Guard Corps naval vessels patrolling the strait, their speedboats maneuvering near larger tankers, projecting a palpable sense of military control. The strait has long been a flashpoint for regional and international conflict. Throughout history, from the tanker war of the 1980s to modern-day diplomatic standoffs, Iran has repeatedly used the threat of closing Hormuz as its ultimate leverage. This ability to hold a significant portion of the world's energy supply hostage grants Tehran a level of influence that extends far beyond its conventional military or economic might. Every diplomatic incident, every tense negotiation plays out under the shadow of this critical vulnerability. The consequences of a disruption, intentional or accidental, would be immediate and catastrophic, sending shockwaves through the global economy. Scene cuts to a frantic oil trader in a trading room. Stock tickers behind him are a sea of red, while a screen showing Brent crude oil prices soars past $150 a barrel. E-trader. Panic, absolute panic. A closure, even for a few days, would mean an immediate spike in oil prices. We're talking triple digits overnight. Markets would plummet because the uncertainty would be crippling. This wouldn't just be a problem for Wall Street. The economic domino effect would reach every corner of the globe. Scenes of daily life would be transformed. Gas station signs would display exorbitant prices, news channels would broadcast endless reports on the escalating economic crisis, and factories, starved of energy and raw materials, would grind to a halt. While some alternative pipelines and overland routes exist, their capacity is a mere fraction of what passes through Hormuz. They could never compensate for a full-scale shutdown, underscoring the world's profound and inescapable reliance on this single waterway. The video transitions to a slow-motion cinematic shot of the sun setting over the Strait of Hormuz. Several massive tankers are silhouetted against the brilliant orange and purple sky, their journey appearing both majestic and perilous. The geopolitical analyst reappears for a final statement. Mus analyst. Ultimately, the Strait of Hormuz is more than just a choke point. It's a barometer for global stability. Its status reflects the delicate balance of power in the Middle East and, by extension, the health of the entire world economy. The final shot pulls back from the strait, returning to the satellite view of the Earth. Lines of light connect the Persian Gulf to every continent, illustrating the intricate web of global interconnectedness. Narrator. This fragile lifeline, just a few miles wide, connects us all. It flows with the energy that powers our cities, fuels our industries, and sustains our way of life. And its security remains one of the most pressing and persistent challenges of our time, a constant reminder of the delicate thread upon which our global prosperity hangs. Why is a narrow strip of water halfway across the world so critical to the global economy? This is the Strait of Hormuz, a choke point connecting the Persian Gulf to the open ocean. It's only 21 miles wide at its narrowest point, yet nearly a third of the world's seaborne oil passes through it every single day. Control of this strait means control over a vital artery of global energy. The United States has long maintained a significant naval presence in the region with a clear objective: to ensure the strait remains open for international trade. However, tensions frequently flare, particularly with Iran, which borders the strait to the north. In response to political pressure or military actions, Iran has repeatedly threatened to close this critical waterway, viewing it as a powerful point of leverage. This geopolitical chess game creates ripples of uncertainty that travel far beyond the Middle East, shaking the foundations of global financial markets. So, if this waterway were to be closed, what would happen to your investments? Let's look at oil, gold, and cryptocurrency. The first and most immediate effect would be on oil prices. With nearly 20% of the world's supply suddenly choked off, the price of crude oil would skyrocket. Analysts predict prices could jump to $150 a barrel or even higher, almost overnight. This surge would be felt globally, leading to higher gas prices, increased shipping costs, and a slowdown in economic activity as energy becomes drastically more expensive. The world runs on oil, and a disruption in the Strait of Hormuz is a direct threat to that system. In times of crisis and economic turmoil, investors traditionally seek shelter in safe haven assets. The most trusted of these is gold. For centuries, gold has been a store of value, a hedge against inflation and geopolitical instability. If the Strait of Hormuz were to close, triggering an oil shock and fears of wider conflict, we would almost certainly see a massive flight to safety. Investors would rush to buy gold, driving its price sharply upward. It's a classic market reaction. When fear takes over, the timeless allure of gold shines brightest. Now we come to the wild card, cryptocurrency. What happens to assets like Bitcoin in such a scenario? Here, the market is deeply divided, and two competing narratives emerge. The first is the risk-off argument. In a panic, investors tend to sell what they perceive as their riskiest assets. Cryptocurrencies are notoriously volatile, and in a global crisis, many would rush to convert their crypto holdings into cash or more traditional safe havens like the US dollar or gold. This sell-off would put immense downward pressure on prices, potentially causing a market crash. We've seen this happen before, where geopolitical shocks lead to a sea of red in the crypto markets. However, there is a second powerful narrative: crypto as a hard asset or digital gold. Proponents of this view argue that Bitcoin, with its decentralized nature and fixed supply, is the ultimate hedge against the failures of traditional government-controlled financial systems. In a world where a geopolitical conflict can instantly disrupt global trade and devalue currencies, a borderless, censorship-resistant asset becomes incredibly attractive. From this perspective, a crisis in the Strait of Hormuz could trigger a surge of capital into cryptocurrency, as investors seek an alternative that exists outside the control of any single nation. So, what's the verdict? The truth is, the reaction of the cryptocurrency market is the most unpredictable. It's a battle between fear and ideology. While an oil price spike and a rally in gold are near certainties, the fate of crypto would depend on the prevailing sentiment of the moment. Would investors see it as a speculative risk to be dumped, or as the ultimate safe harbor in a storm? This uncertainty is what makes the Strait of Hormuz not just a geopolitical flashpoint, but a fascinating and critical case study for the future of finance.